Good afternoon, everybody. Going to go over our Forex trades for today, Monday, May 16th. Hope everybody had a great weekend. So we had two trades, well, really just one scalp trade, but we correlated with the Swiss franc Japanese yen. So it was US dollar Japanese yen was the signal, and like I said, we correlated with half the amount of size of US dollar Japanese yen with the Swiss franc Japanese yen. So basically, the Swiss franc Japanese yen was half the size of US dollar Japanese yen. They're very highly correlated. That offsets any potential risk that we're taking in the trade. We're going to go over that in a minute. We did that. So in that trade, we pulled out 4.5 pips on a size adjusted basis between the two. We'll go over them in a minute. First, economic news for the day. Not a whole lot out there. There were some holidays in Europe, so trading's been very slow. But there was some news that came out over the weekend, and a little bit of economic news we'll discuss. This morning, New York Fed manufacturing came in terribly, came in with a negative reading, was supposed to be a positive reading. That was probably a big number. The other one was the National Association of Home Builders. It also missed, but by a very narrow margin. So not a whole lot to discuss there. Is New York Fed manufacturing a big shock to come in with a negative number? No, because we know 90% of the economy is service-oriented. We're not manufacturing anything anymore here in the States, so not a big shocker to us, although some people on the street were acting like it was shocking. Neither one really impacted markets, any markets, bond markets, currency markets, stock markets. So really just a slow day. Last Friday, Goldman Sachs came out with a very bearish call on the market. They were really one of the last big ones to try to remain bullish. JP Morgan, Bank of America, Citigroup, UBS Securities, they've been very bearish. Now Goldman came out extremely bearish. They came out with, I think it was 6 points. I'll just quickly go over them. One, they say valuation is a necessary starting point of any drawdown risk analysis. At 16.7 times forward multiple, the S&P ranks in the 86th percentile relative for the last 40 years as far as risk. So they're saying it's very highly valued and very risky here. Supply and demand trends also suggest downside risk. 3, corporate buyback represent the single largest source of equity demand, but may wane over the coming months. We've been saying that. We know the smart money or the big money has been net sellers for 15 consecutive weeks, the most ever in history. Yet markets really aren't going anywhere, and one of the main reasons is corporate buybacks is at all-time highs. Number 4, they said Fed Fund futures market currently implies an 83% probability of zero or a 1 rate hike in 2016. We've said that. It doesn't get over 50% odds until sometime in 2017. They say now dormant economic growth concerns could awaken at any time and provide a catalyst for a sell-off. Well, if you've been listening to these videos, no surprise there. And then they talk about the U.S. presidential election that could create some of the sell-off. So just wanted to point out that Goldman has turned very bearish on markets. Another chart you guys could watch as far as global or I don't want to say global markets, but markets here in America. You can watch the S&P 500 versus the consensus of the 2016 GDP and also the yield curve between the 2s and 10s. Yield curve between the 2s and 10s is the flattest it's been in years, I believe, since the financial crisis. And it's been obviously sloping on the downside. And consensus 2016 GDP expectations has also been going down. Equity markets usually follow those, and they haven't. And the chart is completely uncorrelated. And we like to see things correlated. So just something to look at. As far as our trading, we had the US dollar Japanese yen last night that we got a signal to go long, 108.725. We correlated that with Swiss franc Japanese yen by shorting it at 111.384, half the size. So we're not completely we're not completely hedged, but taking a little bit of risk there. We got a nice little pop. We were expecting it to make a run to the figure of 109, which it did do. but later in the evening after we had shut things off, it happened right around midnight, so we were done for the evening. So we sold 108.824, picking up 9.9 pips. Probably got out a little early. If we would have hung out another hour, we could have got this pop here. Sold it around 108.90 before it made a run up to 108.97. But we took out all of it, 108.824, picking up 9.9 pips. And at the same time, the Swiss franc, we were short from 111.384. We covered that 111.492, losing 10.8 pips. But again, half the size, so that's equivalent to 5.4 pips. So net result is a gain of 4.5 pips. So we'll take it and we'll move on. Unfortunately, there just wasn't any other action not last night, but this morning. The economic news just wasn't there. Holidays in Europe, like I said, so a little slow. If it wasn't, we could have had maybe one or two more trades here. And we're actually watching Euro dollar and Euro Aussie for a potential swing signal. We haven't got it yet, but we'll monitor that and see what happens. Other than that, we have our other correlation swing position, which we're monitoring, and that's it. So we'll be back tomorrow. Soon we get some action tonight or tomorrow morning. If you're still trading now, good luck. If any signals come out, they'll be coming your way. Have a great rest of your day.